Hi, everybody. Thanks so much for joining us at a 6 p.m. on a Thursday. So welcome to our session on what happens at Iterative. I'm Judy, the marketing lead for Iterative, and I'll take you through a short 10 to 15-minute session covering the basics of the program. And then I'll hand over to Hsu Ken for the Q&A, which I know everyone is waiting for. So behind the scenes today is helping me is June, our content strategist. She's going to be on the chat as well. So if you are going to be asking any questions, we will use Slido for our questions. So you can scan the QR code, you can type in the link to join the Slido page. If you ask any questions here, we will also transfer it to the Slido page later on so you can upvote on the questions. So for those who are joining us for the very first time, just to do a quick refresher about Iterative, we are founded for founders by founders. And our mission is to actually increase the GDP of Southeast Asia through entrepreneurship. But to do that, we need to make entrepreneurship more accessible to more people and to give founders the tools and support to be successful. So as part of this mission, we run events like this to help founders solve their biggest problems. So since Iterative started in March 2020, we have raised 65 million across 2 funds. We've invested in over 100 companies and over 300 founders. The Iterative companies have collectively raised 168 million, and the total value of Iterative companies is now worth 1.2 billion. We're accepting applications for our summer 2025 batch. Just as a reminder as well that there are no fees. We invest upfront of up to 500K. And in the batch, founders will receive 3 months of targeted support from experts and visiting partners. So this AMA is the perfect opportunity to ask us any questions you have about the program, why it's the program for you, why is it good for your startup, what benefits you get out of it. All of those questions, please feel free to pose it here to us. So just a couple of things to go into details, what we mean when we say full upfront investment and no program fees. So just calling out 2 things. So firstly, we invest up to 500K, and the minute you're accepted into the program, you get the full amount. So we don't wait until the program starts. So if you apply today, you're accepted tomorrow, you get the money immediately after that. Secondly, we don't actually give out any terms that we wouldn't accept ourselves. So in fact, we're all about educating founders on what deal terms are, how to protect yourself from the outcomes, and we don't charge program fees for your time with us. We don't ask for you to hit any sort of like milestones. We don't ask you to hit any sort of tranches before we disperse a percentage of the investment. So there's also no clawbacks, no hidden terms that require you to pay back any investment. So with that, let's go into what happens during the program itself. So let's start with the goal of the program. So we're not here just to guide founders. Effectively, we're here to make sure founders significantly increase the value of their startup. And you can increase the value of your startup by getting more people to actively use your product. And we provide focused support each week to help founders do exactly that. How we do that is at the beginning of the program, we work closely with founders to understand their biggest challenges and growth blockers. So we'll set the targets together. And the goal for you is to hit 5 to 7% growth in your target area each week. And every week, you're working with your lead visiting partner to keep the blue bars above the red line, as you can see in the chart here. If you are hitting your targets, the conversations you'll have is figuring out what's working and how to do more of it. If you're not hitting your targets, the conversation will be focused on figuring out what's not working, what you can learn from it, and what to do next. And if you didn't realize, that's what Iterative actually is named after, the process of really iterating and learning from all this. So we'll work with you on your startup throughout 12 weeks, and you'll get access to all of the batch's visiting partners and also our general partners. You do this through office hours, which you can book with any partner as often as you need to for advice. So founders often tell us that office hours has to be one of the most significant impacts to their mindset, to how they view challenges and how they prioritize solutions. You'll also have group office hours, which are sessions in a smaller group with other founders in the batch. These are equally significant because you'll be hearing how other founders are facing and working on their own challenges. So your startups may be different, but oftentimes the challenges that you face at the early stage can be very similar. And knowing there's someone who's going through the same thing that you are going through and that you can relate to is very powerful. We also have expert sessions and speaker sessions for inspiration. So some of our past speakers are productivity experts like Nir Eyal, the author of Hooked, How to Build Habit-Forming Products. So I mentioned why founders find office hours so significantly impactful for their startups, and here's why. Iterative is the only startup program that insists on founders as visiting partners. So they can be investors, they can hold roles in other company, but what's non-negotiable for us is that they must have been a founder at one point, current or otherwise. The reason is that nobody knows what it's like to be a founder except someone who is or was one. So as visiting partners, the advice of having been in your shoes, facing the same problems and coming out the other side is advice based on experience, trial and error, and it's not theoretical. So the advice is really based on what they think you should do because they've been there. Our visiting partners come from different backgrounds. So fintech, like Diana, B2B, logistics, and we try and pair startups with a visiting partner we believe can understand their business the most. So this is just a small section of all the visiting partners who have worked with us. Aaron was most recently in our W25 batch. I think so is Nathaniel, Derry as well. So some of these visiting partners work across our batches, and some of them actually work one or few times. But every batch will have a different mix of visiting partners. So fundraising, the last few weeks is our fundraising bootcamp. So what most programs don't tell you is that fundraising is a skill. So we can teach you how to get good at it. There's more to fundraising than a good pitch deck. So one founder actually referred to it as learning how to close sales, actually. So during these weeks, you'll create a pitch together, you'll practice together, and you'll learn from friendly feedback. And once you're in shape, you will actually pitch at our demo day to over 400 investors. Whether you actively fundraise after or not, demo day introduces you to the much wider network. And then the last thing I'll talk about is actually our community. We always say the community is one of the most important parts of being in the program. One of our founders referred to having the community as a place where everyone has shared trauma, and that knowing you can trust and be vulnerable with a group of founders can help build confidence, and it supercharges your founder journey compared to going at it alone. So once you're part of Iterative, you're Iterative for life. So as you go through your batch, you get to know the wider alumni of portfolio company founders as well, not just your own batch. There's plenty of opportunity to network. As you can see, we held a founders retreat in 2024, and we're doing one now every year because it's so popular and it was so well received. So we have our annual retreat, we have our local country meetups as well. And just to reiterate how impactful office hours were, some of our alumni founders actually self-organized their own office hours over 12 weeks to keep each other accountable, to share challenges, and to brainstorm solutions. And that's how powerful the network and the community you get of this iterative experience.
All
How
right.
much percentage of the company do you all usually take?
It's somewhere around 10%. And then we invest up to half a million USD, and so for about roughly kind of like 10%, and so you can do the valuation calculations, but it's around there. We invest anywhere between 150 and 500K for roughly about 10%.
What is the eligibility criteria to enter the program?
You need to be based in Southeast Asia, or the majority of your customers need to be based in Southeast Asia. But literally that's the only rule. And maybe the question people are kind of asking about is I've invested in an idea that was 2 weeks old, and so they had absolutely nothing. So
Someone just emailed me this morning as well and said, like, I'm pre-seed, I've got no revenue. Can I still apply?
100%. We should
Absolutely.
we should pull up some metric. What percentage of the companies in the last batch were like pre-revenue? Like it's probably like I mean it's not trivial. Yeah, totally. Maybe the thing I'll say to people so if it's helpful is obviously having traction is better than not having traction, and obviously having revenue is better than not having revenue. But I guess the thing that I kind of think about often is we often will meet people that we think are very promising, and we kind of believe in what they're doing, and so that doesn't kind of so we just invest then. There are some ideas where I don't really believe in them. And so then it's helpful for me to have kind of traction or evidence that will kind of like help me change my mind. For example, one of our favorite companies in the last batch is this company called Auto Radar. And their app literally is about so that mainly teenage boys apparently can run around the world and take pictures of supercars. And I was like, this is the dumbest thing I've ever heard of in my life. And then they were like, oh, yeah, we released it. In the first week, we had 50,000 downloads. And I was like, oh, excuse me, I was not familiar with like what is happening in this whole car sparting thing. And so, look, if they didn't have any traction, I would not have invested in them because I think it's a dumb idea. By the way, I'm wrong all the time. But but they did have traction, and so I thought maybe they're smart and I'm actually dumb. And so it just goes into one of those things where sometimes if you're working on something that I think is like a very obvious problem to people, then you don't need as much. And if it's not obvious, then maybe you do. But actually, the broader thing that I would say for everybody is don't limit yourself. Like your job is not to decide whether I would invest in the company or not. My job is to decide whether I should invest in the company. So you should just apply like all the time in under any circumstances. Um, there is absolutely no penalty to to applying more than once. In fact, we like it. Judy and June will back me up on it. There's nothing in our systems that like worries about this. We never talk about it. Like, there's no downside.
What makes an early stage team irresistible to pre-seed investors even with no traction?
Oh, um, I mean, June or Judy maybe help me with my blog because I've written about kind of some of these topics. I have one on kind of like what we look for in kind of founders. Um, June or Judy maybe will help me kind of post this, but let me kind of talk about it briefly. The first one is a group of people or a person who does what they say they're going to do consistently. And to me, that's what the hallmark of good execution is that they're able to kind of do that. That for anybody who is like, I mean, everybody here is a professional and has worked before. That's really, really hard. You can do it for a short period of time or maybe and all of that kind of stuff, but very hard over the long term. And basically means that you are very good at setting kind of like you're very good at deciding what you are going to do. You're very good at planning. You're very good at strategizing, and you get the work done. All of that kind of stuff. Okay. Second thing is that you are very compelling. And what I mean by and compelling does not mean charismatic. People often, I think of them as the same. They are not the same. If you do what you say if you do what you say you're going to do consistently, that often is very compelling. And oftentimes, compelling people are kind of like quiet or introverts. Nobody believes me ever, but I'm actually an introvert. No one believes me. And so the reason why being convincing is important is because as a founder, you spend most of your time actually convincing people of things. I convince people to apply to Iterative. I convince people that should give me money for Iterative. I convinced Judy and June at one point to kind of work at Iterative. And so that's a very useful skill. And then the third part is that they are internally motivated, which means that they are doing a startup for some reason that is internal rather than external. External motivation is like, I want to be famous, I want to be rich. And it's basically kind of like you want like things that are kind of like outside of you. Internal motivations are like, I really care about this problem. I have a lot of fun kind of working on kind of like problems or like whatever it is. And so those three things kind of make it kind of irresistible. I'd be curious, by the way, I'd be curious what people thought my answer was going to be and whether that was what it was. Because I think a lot of times people think what's irresistible is like, they used to work at, I don't know, like some bank. No, don't care. Actually, I'm sorry if there are people that work at banks here. That's kind of like negative points in my book. Management consultants, no. MBAs, no. Like I don't care about any of that stuff. And so, yeah, I care about kind of the stuff that is kind of like those are all proxies for the things that I'm kind of like looking for. I'm rather look for the actual thing, not the proxy. Next one.
How long and how does the interview work exactly?
Is very straightforward. I just did like five of them right before I got on this call. Okay, so the interview process is very straightforward. You're going to apply on Iterative. Somebody on our team is going to review your application and they're going to basically make a decision about whether they think we should get on a call with you or whether we should not. None of that is automated, just for everybody to be clear. There's a human being that reads every single application. And then basically they say, should we get on a 30-minute call with this person or should we not? If the answer is yes, somebody from our team or one of our iterative founders will get on a call with you. They will talk to you for 30 minutes and they basically are trying to do the same assessment, which is should Hsu Ken or Brian talk to this person? If the answer is yes, then you get on a 30-minute call with me or Brian. And then at the end of that, after that call, Brian or I make a decision on whether we should invest in your company or not. That's it. So total number of calls, two. Total number of time on calls, 1 hour. That's it.
I have two ideas, one that I'm working on, but another that I haven't started. Can I apply with two ideas?
No, apply with the idea that you like the best and you think is the most promising. If that idea does not work, sorry, apply with whatever one you think is the most promising. Because look, if you have two ideas, the thing I'm going to ask you is which one do you think is more promising and why aren't you spending all your time working on that? If you get into iterative with one of the ideas and it turns out it's a bad idea, then work on the other one. Like to us, like pivots and changing ideas are like it happens all the time. It's fine. But you should pick the one that you believe in the most. And if you're not sure which one you believe in the most, then I guess flip a coin. But the real answer is like go do some work to go figure out which one you believe in the most.
Can solo founders apply?
100%. I feel like Judy, we've answered this question. We should just like put this like on a t-shirt or something. Yeah, 100%. Solo founders can apply. We've invested in quite a number of solo founders before. I think one of our favorite is named Charles from Coder School. He was a solo founder and this happens all the time. Maybe I'll give a little bit in case it's helpful people. Maybe I'll give context for like why this comes up all the time. There is some prejudice against solo founders amongst like YC is very famously kind of like this, and then also although it's not a rule, but it's very hard to get into a solo founder. And then investors kind of have some prejudice against this. Okay, why do investors and other people have prejudice against this? Um, Being a founder is very difficult. And it tends to be founding teams tend to be more resilient than a single person. And the reason why that's the case is because sometimes Judy has a bad day and June does not have a bad day, and June can help Judy in those bad days. And sometimes June has a bad day, and Judy can kind of help pick June up. And so we are human beings, and so it's just helpful to have somebody who kind of like you can like talk to and complain about. And knowing both June and Judy, and I put them on blast, they would probably go for a drink, and they would hang out. And it's nice to have somebody that you can have a drink with. When it's by yourself and you go to a bar by yourself and you have a drink, it's a little bit more depressing. You don't have anybody to talk to, and so that's the reason why there's some prejudice to this. But there's lots of counterexamples, guys. Jeff Bezos, I think, is a solo founder. Zuck, I guess, is technically not, but kind of was. Like, there's just lots of kind of counterexamples to this, and so yeah, you should just apply. Sorry, I should give a blanket statement. If your question, and you guys can ask these questions, that's why I'm here, but I'll give the blanket statement. If your answer is, my only rule is either you're based in Southeast Asia or most of your customers are in Southeast Asia, there's no other rules. And so if your rule is can X apply and you fit one of those other ones, the answer is going to be yes, you should. So I'll just put that as like a generic thing now. If you are interested in iterative, you should apply. Just that's the blanket kind of like thing. We can sort out kind of the rest, but don't limit yourself, guys. Like I don't know what is the thing young people say, June? It's like shoot your shot or whatever it is. Like y'all should do that. Okay.
Does Iterative accept candidates from US? I'm living in the Silicon Valley for the last 12 years, but very keen about Southeast Asia market.
No, and just because this breaks the rule that I kind of said. So if you're not based in Southeast Asia and most of your existing users are not already there, then that doesn't fit. By the way, I was just in the Bay Area a couple of weeks ago. My family is there part of the time. I was there for a wedding. I used to live there. The reason why this is the case, there's obviously like I would love to work with people from Silicon Valley. I would love to work from people in other kind of countries and all this kind of stuff. Our fund has a mandate to invest in Southeast Asia. And so when we went to our investors, we basically said, hey, look, Southeast Asia is just really promising kind of like space. You should be investing in there. You should give us money so we can invest in there. And so this is part of our thesis and part of our kind of like mandate from our investors. And so that's why this kind of like exists. And so they would be upset if we like all of a sudden invested in kind of like all kinds of companies all over the place. They were like, hey, I thought you were doing this thing because you really kind of believed in it. Why are you investing in all these other places? So that's why we do it.
So Siva asked this question, and I sort of have a
Yep.
follow-up question. So he's starting in the US, which is why he's asking this, but then
Yep.
he's expanding to Singapore and Southeast Asia. So once he expands and he's got enough traction here, should he apply again?
Yeah, sure. Again, it's just those two rules, guys. It's just kind of like, are you here or most of your users kind of like here? And those are the two rules.
Hmm. If we are students with one semester left while being fully invested in a startup, does being a student affect the application?
Yeah, you're not fully invested in your startup. You have one semester left. Like, and so like, I mean, if you have one semester, I don't. When do people? When is the university term over here in Singapore? Is this Singapore? I don't know. Whatever in Southeast Asia.
Oh, I have no idea.
I have no idea there. That's how long we've all been out of
That's
college.
yeah. Do not test this question,
Yeah,
please.
I don't even know when it ends. Look, here's what I would do, guys. If I were you, one semester is not very long. And so, and again, depending on kind of what it is, the batch doesn't actually start for like 2 or 3 months. And so part of it, it could be just like, just apply. If we really like it, I will like basically talk to you and being like, yo, when do you graduate? And then maybe we kind of work something out. At the very least, just apply for the next batch. So shoot your shot though, like June would say. June, am I using it right? Or am I? No? Okay, great.
Okay.
Fantastic.
Does Iterative invest in B2C products?
Definitely. Both of my startups were B2C products. Oh, sorry. B2C, we invest in consumer stuff. We typically don't invest in D2C stuff. And so we really invest in kind of like technology startups. And so I recently I've gotten back into collecting comic books. I unfortunately would not invest in a comic book publishing kind of business. And so not that they're bad businesses, but they just don't fit kind of like the venture model. And so, yes, we invest in kind of B2C. No, we do not invest in kind of D2C. There has to be some kind of technology angle.
What are some of the common levers which typically help founders grow 5 to 7% per week?
Oh, that's funny. Because the common lever is to find the levers. And so I think the thing that we always kind of think about here is for growing 5 to 7% every week. The first step is actually figuring out who you should be trying to target. And then you're trying to figure out what they really care about, which and then informs your messaging to them. And then you figure out how to reach them. So it's kind of those three parts. And so if you can figure out who you're trying to target, what do they really kind of care about, and what you should be kind of like communicating to them, and then how to get them, you'll probably be able to grow kind of 5 to 7% a week, at least for a period of time until you can kind of get those. And so actually the majority of the batch, the first part of the batch is helping founders kind of figure out those three questions. And by the way, just so that there's not surprises to people. The answer to figuring out those three questions is not Hsu Ken already has the answers and he's just going to tell you like I wish. The process is there are frameworks for how to do this, which is basically designing experiments, coming up with theses, designing experiments around them, and iterating on them. And so a lot of my work is actually just working with founders on teaching them that framework on how to do it. And then they are the ones that kind of come with the hypotheses and stuff. And so if June is going to start a company that resells Taylor Swift memorabilia, we probably wouldn't fund that company. Then June is the one that is the expert on Taylor Swift and all Swifties, I think is the term. And so I don't know anything about that. I'm just going to teach June how to run these experiments. June is the one to be like, okay, I think we should target these people and all that stuff. So, yeah, but that tends to be the first step.
Is the lack of formal registration a blocker for VC interest in startups? When do investors expect incorporation or a legal structure?
I mean, there's got to be a legal structure in order to give you money. Like, if June is like, don't worry, just transfer it to my personal bank account. As much as I trust June, my investors would be like, why are you transferring hundreds of thousands of dollars to people's personal bank accounts? So, you need an entity in order to receive funding. Now, registering a company in incorporation is honestly like trivial. So we've actually committed to investing in companies before they had a legal structure and then just help them create a legal structure and then we just put our money in. And so look, it's not that complicated. It's not that hard. We can like help you with this. You just talk to a lawyer. Like you can honestly have this done by the end of the day. Okay, well it's 6:30, maybe not today, but like by tomorrow. Like it's not that big of a deal.
Are there specific metrics or milestones that VCs typically look for before investing in an early stage startup? What should we focus on to become VC ready?
Typically before. Um, I mean, look, I think. By the way, the caveat I always kind of say to people is like the goal of startups is not to raise money from venture capital. They're just and look, I'm in venture capitalists. We are just a stepping stone that you should step on to get to what you're actually trying to do. We're not that important. Your job is to make something that is useful to people, and so sometimes getting money makes that easier, and so you go to people like me to get money. But that's it. We're not the end game. We're not that even that important. Um, The things that people typically look at is not actually kind of specific metrics and not specific milestones. And by the way, there's no magic number here. I say this kind of all the time. If there was a magic number, I would tell all of you the magic number. Our application form would literally be, have you hit the magic number? And if you have, then I would give you money. Like, so there's no magic number. Um, the way you want to think about this is how big of a problem, how important of a problem are you working on, June? And I feel like I have a post of this somewhere. How important of a problem are you working on, which you can break down into two parts. How many people have the problem for each individual person? How painful is that problem? And so the VCs will look at how important the problem is. That helps dictate the market. Then they will try to decide whether they think you can solve the problem and you can kind of do all the navigating and you can kind of like convince people and do what you say and all of that stuff. And then they look at traction or evidence. They look at traction as evidence for the first two. So if June tells me everyone in the world, their primary thing that they care about is whether they get Taylor Swift tickets or not, and that's the most important problem to every single person on the planet. And then June says, by the way, I'm the best founder that has ever existed on the planet. And then I say, okay, June, how many Taylor Swift tickets have you sold? And she says, none. I'm going to start wondering if Taylor Swift tickets are the primary problem that everybody has, or whether that June is as good as she says she is. Because if the problem was really big and she's as good as she says she is, she probably should have sold some Taylor Swift tickets. So that's how VCs tend to think about kind of metrics. Now, if I for example, I'm just using all the popular culture. I'm really into comic books right now. One of the best comic books that I'm reading is called Absolute Wonder Woman. It's fantastic. If June comes and sells me something about kind of like some problem around Absolute Wonder Woman, I'll be like, June, say no more. I'm reading it. I already understand it. I'm just evaluating whether June is kind of like a good person or not. June doesn't have to show me kind of like a bunch of evidence because I already also buy that this is like a problem and I already know about this space. So for some VCs, you need evidence because they don't believe the problem or they don't believe that they don't think you're compelling. And for some VCs who already believe the problem, you don't need as much metrics. And so it's kind of different. Yeah.
Would you consider companies based in Singapore but markets outside of Singapore?
Yeah. They just need to be in Southeast Asia. Most of our companies that are operating outside of Singapore are domiciled in Singapore. The reason why this is the case is because most outside investors, and even in Southeast Asia, they would prefer to invest in Singapore domiciled company because Singapore tends to have the most kind of like transparent and kind of stringent kind of like I guess business kind of like landscape. It's the most kind of like okay, I'm Malaysian by the way, so I guess I can kind of like say this and it kind of kills me. It's the most trustworthy one. And so like even YC, for example, they only invest in three jurisdictions: United States, Cayman, Singapore. That's the list. And so, yeah, you can as long as you fit our mandate, and you can be incorporated in Singapore. Actually, we prefer that you incorporate in Singapore, but work wherever. We have Bangladesh companies that are domiciled in Singapore, for example.
Have you helped match your investment companies with needed staff? So, for example, a tech lead.
Yes, I have helped this happen, although to be honest, this is like not actually most of the stuff that we kind of help with. Like, I mean, this kind of stuff is like, you can kind of go find recruiters and all that stuff for. Like, you don't need somebody who's been a founder before to help you with this. So this is the majority of our program is not like introductions and it's not kind of recruiting and all this kind of stuff. We're trying to help you kind of like grow very quickly. But I have done this in the past, and some of the things that I've done in the past is I've worked with non-technical founders. I'm technical myself, so I've actually interviewed CTOs for people. I've interviewed kind of like tech leads, and so yeah. Again, my job is I try to get you to grow 5 to 7% every week, and then whatever is keeping you from growing 5 to 7% a week, that's what we're going to work on. Most of the time, it actually is not hiring, though, if I'm being honest. This tends to be a trap that people fall into. So yeah, but I mean, every case is different. I have no idea what the situation is here.
Some rejected startups later succeed. How do you tell if a founder is early or just wrong?
No idea. No idea. Like, I don't know. And look, this is a really hard question, right? Um, I've kind of like I've invested in some founders who were very early and they ended up being wrong. And I've invested in some founders who were very late and they ended up being wrong. And I've not invested in companies that were very early and I ended up being wrong. And in every permutation of it, it's very hard, right? And so, look, if any investor says they're very good at this, I'd be very skeptical. This is a very hard thing to do. It's very hard to tell. Even for my companies that did very well, I didn't even know if it was going to work. Like even as a founder, I can't tell if my idea is a good idea, whether I'm early or I'm just wrong. So this is a very hard thing to kind of like to tell. But you basically have to place your bets, right? And so when you make an investment, you are placing your bets, and that's why it's an investment, and that's why it's not like I don't know, I'm not putting money in a bond, which is like very predictable, right? We're making a bet, we're making an investment, and as a founder, you are also doing the same thing. And so, yeah, I don't know. Um, maybe the if I'm trying to kind of like answer it though, it's the thing that you end up kind of underwriting is the founder, and so Um, it's hard for me to tell whether an idea is early or just wrong. But the thing that is kind of doesn't change as much as, sorry, doesn't change at all as the founder. And so in those cases, I just end up leaning on the founder more, where I'm like, do I think this person is like really compelling? And if they're really kind of compelling, and I think that they're going to be kind of be able to do a good job, then they're going to be able to figure out whether it is early or whether it's wrong. And if it is wrong, they'll probably figure out something else to do. And so I think in these cases, you tend to kind of lean more on the founder. But all investors will have some opinion of whether it's early or wrong, and it really just comes down to, do I think that the problem is an important problem or not, and do I think it's kind of solvable now? I think.
What kind of materials or requirements do you need during the 30-minute interview? Just a simple pitch deck and convincing pitch is okay.
None. I don't even have people pitch. I literally start the call and I'm like, I already looked at your application or deck. No need to pitch me. I just have some questions. Let's talk about what you're working on. So nothing. Like you can apply to iterative with just a pitch deck. You just go to our application, you attach your pitch deck, or you can just fill out the questions in the pitch deck. That's it. That's all we need. Nothing else. I think we allow people to upload a video now, which is kind of cool. And so sometimes people record videos of like talking about what they're working on, which are very kind of helpful actually. But no, nothing. My calls are, I read your application, I take some notes, and then we get on the call and I ask you some questions and we talk about what you're working on. That's it.
What are some of the examples of the questions that you would ask?
Oh, yeah, it's super I've done this so many times now. It's kind of formulaic, guys. I'll just tell you exactly. At some point, um, at some point during the call, I'm going to ask you, why are you not growing faster? And it honestly doesn't matter how fast you're growing. And the reason why I ask you that question is I'm trying to figure out how much time you have spent thinking about that, because as a startup, that is probably the primary question. And so if I ask that question and somebody hasn't thought about it very much, and I can kind of tell they haven't thought about it very much because they'll say things like, I need money for awareness. I need to do branding and kind of like these kinds of things, which are like kind of fluffy, or like I need to hire more people. It's just kind of fluffy answers. It just means that they haven't kind of like thought about it very much. And then the better version of answers are like, okay, so I've been running these like 5 experiments. I've tried paid advertising this way. I've tried kind of referrals this way. I've done this. I've done this. I've done this. I think I have the ICP down, but I haven't figured out kind of like what is the right channel to reach them, my conversion rate in all of these places or whatever. And so I'm just in process of trying to figure that out. So my primary blocker right now is like, I cannot figure out the right channel to kind of do that, but I've got these experiments in flight. I'm like, cool. That person is going to figure it out, right? And so, it's funny. I can tell really good founders because when I ask them that question, they light up. They're like, okay, yeah, 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 yeah. This is the like thing I think about all the time. And people who are nerds, and I say that in the best, I think of myself as a nerd. I hold them in the highest regard. Nerds are just people who are kind of like really into what they're doing, whatever that is. I don't care what it is. And so I think startup nerds are just kind of like, when you ask them the right question, the one question that they've thought about a lot, they just light up and they just like can't wait to talk to you about it. And so, yeah, I look for some of those things. Another thing I kind of ask for a lot is, how do you know this is an important problem? And so I don't know if June is working on like Taylor Swift tickets. I'm like, June, how do you know that a lot of people like Taylor Swift tickets? And if her answer is I like Taylor Swift, I'm like, ooh, like maybe, but like not a great reason. If she's like, oh, I've done a bunch of surveys, I'm like, okay, that's better, but I don't believe surveys. Like, I think people will say whatever they want. And most of the time, surveys go out to like June's friends, which obviously all like Taylor Swift. And then and if June is like, oh, I know this is better because I sold a bunch of like I basically set up a website to sell this kind of like stuff, and I kind of like fake door tested this. I got this much, whatever. I'm like, okay, June has actual data. So great. So those are my two things, kind of just like what's blocking you from growing faster, and how do you know this is an important problem?
So if our industry problem statement doesn't have 100 billion TAM, would that hurt our chances of applying?
I don't care about TAM at all. I could give it again. I guess this is our event, so I can swear at it. I hope there's like not kids around. I don't give a shit about TAM. 100 billion, 200 billion, 50 billion. You tell me how big you want the TAM number to be, and I will make that shit up. Like, look, I've been a founder before. I can make this up too. Like, I don't care. It doesn't matter to me. And look, they're all based off of some nonsense research that somebody, like, it doesn't matter. These are all bullshit. Make a case for why your problem is an important problem, and make a case for why either a lot of people have it or for each individual person it's very painful. If you are going to do this like contrived TAM thing, do a bottoms up one. And bottoms up is basically kind of like, okay, there's Taylor Swift did this, sold this many tickets in Southeast Asia last year. If I got each of those people that went to Taylor Swift to pay me $10, then it would be this much money. So like, at least bottoms up is like more reasonable.
Are there any particular industries that Iterative
Hmm.
typically invests in?
Okay, I'm going to caveat and say we invest in everything. I mean, literally invested in an app that takes pictures of cars for teenage boys. So I have no moral high ground on anything. But we do typically we invest in all kinds of stuff, but we've invested in a lot of kind of fintech companies. We've invested in some logistics companies, invested in some game companies. Brian likes HR companies. I don't as much. We've invested in a couple of kind of AI companies. And so it's kind of across the board. But oftentimes I feel like the most disruptive ideas are ideas that are in industries that don't have names. And so, yeah, we have no mandate here. Yeah, we can invest in whatever we want. But yeah, we invest in quite a lot of stuff. Again, I want to invest in whatever industries are the most useful to people in Southeast Asia, which I think is a lot of fintech stuff, to be honest.
So I saw your video about founder traits and how to succeed, but how do you see if the founder is good or not good?
Oh, it's relatively straightforward. Let's say I want to test for do they do what they say they're going to do, right? So the first thing I test for is what do they say they're going to do? So I ask them, hey, what is your goal over the next 3 months? If they can't give me a goal for the next 3 months, then they automatically fail my test because you can't be a founder who does what they say they're going to do because you can't even tell me what you're going to do. So fail. Let's say that you have a 3 month goal, then I'll be like, how are you going to accomplish the 3 month goal? If you have no plan, then I have no belief that you consistently do what you say you're going to do because people who do not have plans cannot consistently do what they say they're going to do. Maybe you can pull it out of your ass once in a while, but like not consistently. So you have no plan, then I don't believe you. If you do have a plan, I will then ask you, why is that your plan and not this other thing? And then I'm asking questions around kind of strategy, like why is your plan? Why are you doing this now? The other thing, and that's another reason why you would not be able to do that. So that's my test for kind of like, do you say what you're doing, say you're going to do? The convincing argument is very straightforward. I just listen to your answers and I'm like, am I convinced or not? And if I'm not convinced, you're probably not that convincing. And then the internal and external motivation, that one's a little bit trickier because that one I'm like trying to read into somebody's soul. But honestly, you can often kind of tell when you talk to them based on how they kind of answer some of the questions. So like sometimes there are people who tend to be more internally motivated talk about their customers all the time. They just keep talking about their users because they really care about their users. And there are some founders who they never talk about their users all day, but they will drop being Forbes 30 under 30 like 100 times, which by the way is a negative signal. I actually think that's a bad sign. And so I'm like, okay, these are things you care about. Or they drop what school they went to 100 times, or like, I don't know, some job company that they think is really prestigious. Like if they're just name dropping prestigious stuff, then I'm like, okay, cool. This person is primarily driven by external motivation. That's why they're name dropping prestigious stuff. So
The 7% week-on-week growth is a strong benchmark in B2C SaaS.
Mhm.
In enterprise AI infrastructure, growth is nonlinear. So how do you evaluate
Oh, we
keep
get this
longer?
question all the time. Long sales cycles means you haven't figured out your sales cycle. You can shorten sales cycles. This is literally on one of the slides at orientation where do not accept that your sales cycle is just kind of like long. Go make it short. And so, no, I reject the premise. Like you can grow 7% week over growth in kind of like enterprise sales. I have friends that do it. We see it in the batch. It can happen. It is kind of more. It is kind of more patchy, but still, you can kind of like do it on an aggregate amount. So you just build enough of the pipeline, you figure out the levers, but you can do this. So I think this is like actually a mistake that people kind of like make, where they think that they just accept that they have long sales cycles, and really good founders have high agency, so they're like, okay, this seems a bit long. I know other people say it's long. I'm going to make it short, and they win.
Do you accept non-technical solo founders who are vibe coding their
All
product?
the time, all the time. Look, at some point you're going to probably need you're going to need to make a product at some point, and guys, vibe coding gets you kind of like a part of the way there, but it's not going to you're not going to build a product for a million people off vibe coding. And so at some point you're going to need to be able to do this, but all a product is useful for at the very beginning stages is just as a test to see if people want what you're building, and vibe coding will help you pass that test. So like, great, fantastic. As long as I think you are going to be capable enough of convincing kind of other people to join your company at some point. It doesn't have to be as a co-founder, but at some point you need to build a product. And so, but yeah, totally.
Is rejection normal or just me? After failed prototypes, we built something, but investors still doubt us. Is that fair?
Fair is kind of like a moral judgment. I don't know if it's fair or not, but it's absolutely normal. Um, I mean, well, I was trying to give some guesstimate on the number of times I've been rejected in my life and from like a startup point standpoint, but I'm kind of just like it's kind of innumerable. Um, let's see. Brian's third company, which became a over $1 billion company, he was rejected 80 times by investors for his Series A alone. 80 times. And by the way, he got his money from Andreessen Horowitz, which was probably like the best venture capitalist. And so he got rejected 80 times and he still got money from A16. So this is like rejection is just kind of like part of the game. You just have to kind of grit your teeth. You just have to kind of persevere through it. I'm, I won't tell you that it like doesn't hurt. It does hurt, every single one. And I won't tell you that it like, oh, at some point you just kind of like get used to it. You do kind of get used to it. It still sucks, but rejection is kind of like is kind of like a very kind of normal thing. Um, it's not just you. It happens to all of us. It happens to me on a regular basis now. It happens to Brian on a regular basis now. Like it's just kind of how it goes. Actually, I'm so paranoid now that if I don't get rejected a lot when I start something new, I just think everybody's lying to me. And they're just not actually giving me real feedback. Like if I go to a bunch of people and I'm like, "Hey, do you want this thing?" And they're like, "Oh, I totally want this thing. This thing is so great." I'm like, "You guys are all lying to me." I've never in my experience has there ever been a case where that happens. So, um, yeah, I guess I seek rejection on some level now, but it's totally normal. It's not just you. And I think this is part of what's great about programs, whether iterative or kind of others. But if you're around enough founders, you will find out that it is not just you and that this is totally normal. And if that helps you kind of like eat more of the rejection, then great.
What should we include in the pitch deck?
Um, I mean, honestly, you're just answering the questions in the kind of like slide, but I'll just give you the uh I was gonna say this later. I have it somewhere, but there's basically I don't know, June or June. Maybe you can find it. Basically, in our fundraising boot camp kickoff, there is a slide that is literally like, here are the slides everybody should use. You guys should just use this. This is literally what we tell our companies to use, so you should just use that. But you can also just answer the questions in the application.
I have no experience in starting and running a company. Do you provide mentorship and guidance for first-time founders? Struggle with hiring and operations.
Of course. Of course, like all of us that didn't have experience starting or running a company. Like, I don't know if you guys know this, but like, before starting Iterative, I had no experience starting or running a venture capital fund. I never even worked at a venture capital fund. Like, yeah, totally, right? Like, everybody who starts a company, you don't have experience. This is the game we all play, right? And so, the primary job is to kind of like mentor and guide. And look, sometimes second time founders, I work with third time founders. It doesn't really matter, right? But um, I think absolutely like you're just one of us. Like all of us were this way. So There's absolutely nothing wrong with this. I think the funny thing, I don't know who you are, I don't know your situation, but I'm like reading this and I'm like, if you think your primary problems are hiring and operations, I'm willing to bet like $100 that that is actually your problems, and that is the first thing that we kind of learn when we work with kind of founders and even second time founders. The problems that they think are their really important problems right now are often not actually the real problems, and so I, I'd be very I'd be very surprised if these were actually kind of like the things that you're kind of like sorry, you might struggle with them, but I'd be very surprised if they're actually the problems that are holding you back right now.
So if it's not hiring and operations, typically what are the problems they have? Would it be around growth, like getting customers?
All problems are problems of kind of growth, and because the primary kind of thing that you should be going for when you're starting a startup is kind of like you want to be growing really fast. That's kind of your litmus test. And so if you're growing fast, you're on the right track. And so growth is not the I mean, growth is kind of the most important thing, but like the most important thing is actually making something useful for your users. But the best way to focus on whether you're making something useful or not is to look at growth. Um, Nobody's going to just use your product for no reason. And so if you're growing really fast, you're probably useful. And if you're not growing very fast, you're probably not very useful. So it's a useful litmus test. And then all problems stem from there. So the next set of problems that comes underneath that is like, why am I not growing fast? Who is my target? There's all those questions. But the stuff that you dig in, that you learn when you go even deeper than that is almost all early stage startups are actually held back by the founder. There is some blind spot, there is some insecurity, there is something to kind of like do that is holding them back, holding their startup back. And when you are very early stage, and by the way, this was the case for me, I'm not like exempt from this. When you are a very early stage founder, you basically are your startup. And so any insecurities that you have about your startup show up in your startup. So, for example, my first startup, we were four engineers and we basically just wanted to write code because that was our favorite thing to do. And we were like, didn't want to talk to customers because we didn't know how to do that. And that was like very scary. And talking to real people was scary and all that stuff. And so we just wrote code in a basement for a year and didn't talk to any users. And lo and behold, nobody wanted to use the product that we made up in our head and talked to nobody about. And so, look, the thing that held us back was because we optimized doing what we like to do instead of what we should be doing, which happened to be uncomfortable.
So if I get into iterative or similar accelerator, do you expect students, founders to drop out and go full time? How do you evaluate their commitment?
100%. I'm not investing in you unless you're already full time. That's it. It's very
Yeah.
straightforward. Like founders need to jump. And by the way, this is going to be the case for all like any investor you talk to. Founders are the people that need to jump first. And so if you really believed in your idea, you would go full time on it. And if you really believed in your idea, you would drop out. And so if you aren't willing to do those things, then I'm starting to wonder if you really believe in your idea or not. And I don't know if I mean, there's so many people who have already kind of made this leap. I'd rather kind of give money to people who believe in their idea than somebody who kind of like doesn't yet. And so this is always the case. We always quit. We always went full time before. We kind of do this most of the time. This is the case. I understand this can be challenging sometimes because, personal kind of financial situations and all of that kind of stuff. But this is kind of like a reality. I haven't heard of anybody investing in anybody who like wasn't kind of like full time already. Yeah. So the way I evaluate is, have you quit your job? And if you say no, then I'm like, okay, you haven't committed yet.
So our traction market are in the US, but our HQ is in Singapore with a US sub. Given this, should we focus fundraising in the US or stay anchored in Singapore?
I don't know what, I guess HQ, IP, I don't care about. Um, I mean, honestly, HQ doesn't kind of really kind of matter either. Um, I mean, honestly, you should just fundraise wherever you think you can kind of get the money kind of the easiest. And so if your entire market is in the US, then maybe that's kind of like a better place to kind of fundraise because maybe they'll kind of like understand what you're kind of doing more. Um, so probably the US. Um, I mean, again, it depends on industry and all that too, because some industries the U.S. will invest more in Singapore. So I don't know. It's a bit challenging to kind of like say, but I think if most of your kind of like market is in the U.S., probably raise from U.S. Investors. I will say that the U.S. investors and Singapore investors, Southeast Asia in general, they are very different types of people. U.S. investors are much higher risk. They are much more willing to kind of like take bets on things and invest in crazy stuff. Southeast Asian investors tend to be much more kind of like, I always joke they're more capital than venture. They need to be a little bit more venture. They play it a bit more safe. So depending on what you're working on.
For startups that operate in a heavily regulated space, it may take some time before it may be cleared to operate. Is that okay?
Yes, but you didn't hear it from me. I would do stuff under the radar to kind of like test stuff. Like again, I think a startup doesn't wait for a founder doesn't wait for anybody, and they have agency to kind of like make this. And so I would be if when I work with startups in a very heavily regulated space, I'm like, okay, what's your strategy to like cut down the regulation? How do you get approved in half the time that you currently think it is? What are you going to do? And then the second time is how do we make sure that people actually want what you are proposing to do and not have to wait for regulations? If you're like, I gotta wait 2 years to get regulated and then we're gonna find out if people want this, I'm like, you're about to waste 2 years of your life. Let's go figure out in some small case how people, whether people want this thing to see if it's worth the like 2 year kind of like wait. Um, which I always joke with June. Malaysians very comfortable doing. Singaporeans kind of like less so. So yeah.
Are there any age constraints to apply?
No, I don't know who our youngest. Sorry, I wonder if they're asking this because if it's like somebody's too old or too young.
I think
I'd be
there's a
so
lot of
curious.
students on this chat.
Oh, is there? Okay. No, there's not. I don't know what I don't know what our youngest investment is, but I would love to beat it. But you have to be committed. So, sorry, in Singapore and in Southeast Asia, can you take like a year off? Are there such a thing where you can defer kind of enrollment for a year? I know there is in the US.
Yeah, I think you can do that for any school, actually.
Oh, okay. Well, I mean, honestly, if you were like 19 and in like NUS or something like that, and you like had a startup idea or whatever, I would be like, defer school for a year. You're probably gonna learn more in that year than you do at school. Don't tell your parents I said that. Tell them.
It's 7 already, but do you have like another minute? So
Yeah,
we'll
I'm
just
good.
answer a few
Yeah,
more
yeah,
questions. Yeah.
yeah.
How many meetings do you usually do with the founder before deciding to invest?
One, and not even in person. One 30-minute meeting. That's it. That's it. Sorry. Okay, let me give people context. We are very different from other VCs. So if you meet the like Monks Hills of the world, which they're awesome, they do 3 to 5 deals a year and they give you a couple $1 million. So they are low volume, high kind of dollar amount investors. You're going to have to meet them many, many times. The thing that Koi used to tell me all the time is he doesn't invest unless they go to dinner because he wants to like see what you're like, kind of like not talking about work and all this kind of stuff. So they do a lot of work. We are high volume, lower dollar amount investors, although our dollar amounts keep going up, but we are high volume. And since we are high volume, we have to make decisions somewhat quickly. And so in the next month, we're going to invest in like 20 startups. And so like, I can't go to dinner with everybody. And also, they're oftentimes in places that are not Singapore, and so that's even kind of like hard too. So we are built to take more risk, and so we have kind of more volume than other people. But I meet them once for 30 minutes. And by the way, Brian and I don't need consensus, and so if you meet Brian, I will literally not have talked to the company that we invested in until orientation, and I'm like, oh, you're a Brian company. So yeah, sometimes I don't meet anybody.
So I think we have a few more questions, but they're all quite straightforward. And June has already answered most of them in Slido. So I think we'll take one more question. Yeah. So I apply to many accelerator programs since I prefer not to stay with one and move quickly. What should I do if I get into two at the same time?
Pick the best one. Look, I don't think you really need to do two. I mean, they take some equity in this kind of stuff. Like, I don't think you really need to take two. I mean, I think we're the best, obviously, blah blah blah, whatever, whatever. But like, you put that aside, I don't think you need to do two. And so, I would pick the one that I think is going to be the most helpful to you. And then I think you should just do that one. And look, if that's not us, that's totally fine. Like you should pick whichever one you think is going to be the most helpful. If you are not sure, I think the best thing you should do is you should go on LinkedIn. You should find the founders who went into each of those programs, and you should message them and being like, "Hey, I would love to learn about your experience at XYZ kind of accelerator." And the question you would ask is, "Would you do it again?"
Okay, great. So thanks so much, Hsu Ken, for answering all these questions. Again, as a reminder for those who had questions on the Slido, June has already answered quite a number of them as well. For those that we can't get to, I think there's only maybe one or two.
You
We
want me
will
to rapid
provide.
fire them, Judy?
Yeah, actually, why
Yeah, let's just
not?
rapid fire. Let's just do
Let's
it.
do that. Yeah. I think one of them is this one from submitting the form to applications, how long does it take?
Well, if you okay, well, I'll try to answer this question quickly. It probably takes probably 2 weeks. Sorry, if you are going to go through our entire investment process where we are deciding you're going to meet me or Brian, it's probably going to take 2 weeks. If, for example, if you apply and you kind of don't pass the first kind of inbox stage, it's probably going to be like 5 days. So it's going to be pretty short. But yeah, but if you go all the way through and we want to invest, it probably takes like 2 weeks. Kathy, who is runs our investment team, is just like on our ass about trying to make this. She literally has an SLA as part of our OKRs that we need to respond to people fast, and so two
You've
weeks is
really
the
tried
SLA.
to. Yeah.
Yeah, she really tries,
Hmm.
which is good, by the way. Like I say, she's on my ass because that's her job.
Okay, I think it's one last question about a stipend.
Stipend, what's that?
I think it's whether they can pay a salary to themselves. Can
Yeah,
they use the funds to pay a small stipend to themselves?
yeah, yeah. I mean, yes. Sorry. Let me kind of answer a broader question. When we invest money in your company, you are it goes into your company, and so there's no restrictions on the money. Now, if I give June $300,000 for her Taylor Swift startup, and she uses all of that money to go to every Taylor Swift concert that's ever going to ever exist in every country on the world, I'm probably going to be like, June, I don't understand how this was kind of a business expense, so I probably won't be that happy. But you get to decide what is in the best interest of your company when we kind of invest in your company. And so, look, there makes when we first raised our first round of funding, our investors told us to pay ourselves kind of a small amount because they didn't want us stressed about we're going to make rent at the end of the month. And there is some amount where it's kind of like, look, if you're going to be stressed out about your own personal financial decisions and you're not going to be able to focus on the startup, then you should use the money to kind of like pay yourself enough so that you're not going to be stressed out about that so you can focus on the startup. We need people to be focused on their startup. And so some of these external things you should kind of do. Um, I actually think most of our startups must pay themselves kind of like some amount. And so I think this is totally appropriate. Again, don't like go overboard. You probably are not going to, you're probably not going to pay yourself as much as you made at your last job, like, each in your burn, but like you should pay yourself some minimal amount so you're at least kind of treading water. If you're just like hemorrhaging, kind of like going into like if you're going into debt every month working on your startup, by please use our money, please. And so don't do that.
Okay,
But yeah,
I think that's all the questions that we have. Is that correct, June? I think we've answered everything.
Yeah, we did.
Jude, what is
Awesome.
your favorite Taylor Swift song?
So can you ask me this every
I know, but there's new people, and
and
I've
I'll
spent the
tell
entire
you
time talking about Taylor Swift.
and I tell you the same answer all the time.
Which is what? I don't know this one.
It's Lover by Taylor Swift. I'm not gonna sing it, Aries. It is the wrong question to ask.
I
Okay,
should be
love.
playing Taylor Swift at the beginning.
The people want you to sing it, June.
No, I reject.
Okay,
All
good.
right. Thank you, everyone.
Thanks,
We'll send
everybody.
an email with the recording after. So again, if you have any questions, please feel free to reach out to us. And please do remember the deadline is Friday, 27th June. And we look forward to seeing all your applications. Thank you, everyone. Have a good evening.
See you, everybody.